On this video, I'll be showing you how I always mark out my key levels and how I judge and take out decisions, like to make decisions before I take in a trade. So, so bear with me and follow up. So, first thing I want to do, I want to understand is, first thing I always like to understand is the profile. And when you come to your chart, you need to erase every old data that you have on your chart. Now, this is the profile. This is where this guy is actually giving a sign that it is going to, right? So this is BTC on a 1 month time frame, right? I mean, so every candle you see here takes a period of 1 month to form. So this is what I always like to do, right? I want to understand what the higher time frame is telling me, and I then get the information of everything. So from this moment, I can see here that we've talked about break of structure, higher highs and higher lows. So just from this chart here, you can see the structure formation. You can see we have a high here, a low, right? A high, a low, a high. So we kind of like expect the same sequence to continue to go into the upside. So what I will do first to see whether the next move, like now I'm seeing to get the next move and to see how prices are reacting on a particular key level. Okay, so what I have here is what I call now a break of structure. You should know this already. A break of structure, and we had this fair value gap here that was mitigated a couple of times before eventually we saw that push to the upside, right? Before we saw that push to the upside. Again, you have another area here. This was another fair value gap here, and it came right down before reacting, right? This is another fair value gap here. It came right down and finally reacting and pushed to the upside. So now we have a new low here. Now you might be asking me, why is the reason? Why did I mark this candle instead of this one? Why did I mark this candle instead of this big one? So what's the answer?
Because it just liquidity.
Yes, it's swap liquidity. So this candle here was the pullback, was the downflow, was the bearish move. So this guy came, cleared out the liquidity, and then closed above the bullish momentum. You see how the buyers are strong and as the sellers are coming down, they are weak. So it's like you can call that a soup or raid, like liquidity sweep. That means the liquidity that was sleeping here has been collected. So guess where price is going to land? This guy is actually going for the next draw on liquidity, which in this case is the external range liquidity, which is this level right here. So right here, you will see me, I will plot in something now, like this on my chart. I'll plot in something like this on my chart. Okay. And now what I see here is this has been a structure that has been broken.
So please allow me, sign me in. I'm using my phone too. I want to record the class, please.
I am recording the class.
Okay.
Yes, it's been recorded. So now we have this move. This is the move we have in front of us, right? This is the move we have in front of us. And this is the move we're going to look out for. Like that is a range. We have the swing low now to the swing high. So what we are going to do now on this level is to map out the high because price gave us the low already. We've seen the low that price formed. So now this is the high that has that pushed the upside, this guy. And now again you ask me, why am I marking this other candle instead of this black one? It's still the same logic. What has this guy done here? collected liquidity. What has it done here? Collected liquidity. So now this is a level that it might come to. This low, right? I hope you guys are following.
Yeah, yeah, yeah.
Good.
Okay, I don't see your screen.
Oh, can you leave and join?
Sure.
Join again, leave the call and join again. Are you good now? Alright, let me know when you join. Are you good? Anyways, let's move on. So what we can see now is the structure that we have in front of us. And this guy right here, this was a key level. Remember, right? This was a key level, this whole area. So, like I always tell you guys, map out your key levels and wait to see the action that price will give you when you get to that particular level. Right. So now, this is the push that went to the upside. This is the downward move. Like this is the impulse push to the upside. This reversal down here, this is the downward move, and then we'll have another one, a break of structure. So now there's liquidity resting here. So let me highlight that perfectly. So there is liquidity resting here. So with this, I am doing a calculative move, like taking stuff gradually, and then I will now know where my key levels are, and then with judging what the candles are giving me, I can now know what to do next. Yes, Clinton, they are available. So with this, I know that yes, this was a buy side liquidity. This right area up here is a buy side liquidity, and which is a key level, and it's a previous day high too. So now I have this move here. Sorry, it's a previous week, like the past price action, right? So I have this low here and I have this high. So there are potentials, so there are chances that this guy might come here. But when looking left again, I can clearly see that there was a fair value gap here, and this guy is actually reacting off a fair value gap. So you should not be in a haste. You shouldn't be in a haste, struggling to just map out zones and go and go and go. You need to map out these zones. You need to map out these zones and wait to see what was left behind after a particular movement. So now I have right here now a tiny small break of structure. So this is the low, this is the high, and now this low right here is a key level. This is a key level here now, and another level is a key level. So this is the structure we should be working with now. Range high and range low. Okay, moving forward. Moving forward. Can you see my screen now, Rev? Moving forward.
I can see on my phone, but not my PC.
All right, just follow up, but no worries. I will save the. I'm recording, so I'll drop it. I'll drop it maybe on YouTube or I'll send you guys it. All right. So now, like I said, this is how I approach the chart. So this title of this video will be like how I approach the forex market as a day trader, and how I get my key levels, and how I react to price when they get to them, and what a particular closure on the key level means to me. When the candle closes with a wick on the key level, that's a whole lot of different information. When it closes with a body, that's another information. So in this case right here, yeah, this was a key level. This right here was a key level. So we are actually waiting to see price action on this key level. So now the candle, the price action that we saw was an impulse push move to the upside, right? So it closed with a thick body, therefore indicating that what we have higher prices, right? Higher prices. Had it been it closed with a wick and the body remained inside, it will signify lower prices.
Yes.
Right. So that's how we judge it. So always make sure you mark out your break of stock. In fact, your key levels, lower lows, higher highs, and then you wait to see what has happened. Now, this is another high that was formed here. Are you seeing the nature of which the candle closed with a wick, right?
Yeah.
So
Yeah, with a
what
wick.
so what is it signifying? Lower prices.
Prices.
And that's why you see the drop to the downside. So now, this right here is a range that we have. So when this guy got here, when this guy got here, it gave us this low, right? And then another high. So there was supposed somehow to be an order block here. By now, you should know what an order block is, right?
Yes.
Good. So there was supposed to be an order block here, which we were supposed to have this push to this downside and then it's continue going up. So what happened? What happened? It was violated. So Mr. Alvin, you are telling me that when you mark your key levels, they get disrespected,
Yeah,
right?
most times.
Yes, they get disrespected. Yes, that is part of the action. Either it respect or it disrespect. So you know for sure that this was a bullish order block. And what happened? It has been violated, right?
Yes, sir.
So therefore, it won't be a bullish order block again. Now it is a bearish order block whereby you look for opposite moves to the downside. And that's why sometimes you see me, I do my analysis and you see me, I do something like this and I do something like this. That means I am waiting to see price action on this level here. So what happened to the level? Maybe I took a position here without having my confirmation and I got stopped out. As a trader, you won't just leave and get mad and leave the chart. Like you leave your chart and you don't, you know, wait to see another action. And now there was a second opportunity that actually happened, and you somehow missed this, and you somehow missed this move. Why? Because you were so emotional, and you eventually closed the trade after you got stopped out. And maybe due to the fact that you had a very poor risk management and you were unable to trade again. So if you look on this one day, what you will see is there is something like a flow. What do we have here? We have a low, we have a high, we have a low, we have a high, we have a low. Maybe we'll have a small high again and then a low because you keep seeing a bearish order flow. When we talk about bearish order flow, you should know. But for those who don't know, it's giving us what? Break of structure to the downside, break of structure to the downside. Remember what I told you about break of key levels? You need to plot them and then you need to wait to see price action on them. So this level here, it got violated with the body, in signifying what? Lower prices, right? It breaks here with the body again.
Yes, sir.
The same thing. So it has collected external range liquidity. It is therefore going for internal range liquidity. Are we together, Favor? Aurel, are we together?
Yeah.
Good. So now you see how important these key levels are. The part they play when it comes to your analysis. So now this is the information I have on this higher time frame. And I'm scaling down again to a more smaller time frame, which is the 4 hours. So we started from the 1 month, now we're in the 4 hours. So we are doing this is what we call top-down analysis, where we are breaking the market from a higher time frame and bringing it down to a lower time frame. All right. So what do we have now here? We have these areas here which are key level. These are areas, swing highs now. So this guy came, collected this low, formed a small low here again. This guy came extra, tapped on that low, and is now pushing to the upside. So it has induced traders that came and we are forcing buys here. And therefore, if they are going longs, where are they putting their stop loss? Below this low here. The market knows that. That is why it's always good to trade with the trend. Favor, what's it? You're calling me. So that's the move. That's the error you see guys doing, because they see that, oh, this thing is buying. I'm planning to enter positions from this area to sell and come down. Let me just buy, and then no, you don't do that in forex. Just because the market is in a downtrend and there's a pullback does not mean you should participate in that pullback, right? It does not mean you should participate in that pullback, right? So allow it to do its stuff, right? Allow it to do its stuff, especially this higher time frame, and then you go. But me, on a smaller time frame, you discover that today I was actually trading BTC. And my entries, my reason for taking my trade was I'm going out straight to the 15 minute, and I'll show you why I was able to enter a trade both on the sell and also on the buy. So after having that higher time frame bias, this is what the smaller time frame is telling me. So this was previous day's low, that is Sunday's low, sorry, Saturday's low. Oh, Friday's low. Excuse me, guys. Friday's low. We have this other one here, and what happened? We had this sweep on the downside, right? And then what is it? What does it signify? It's close to the week, right? Telling us what there are higher prices, so it pushed the upside. Yeah. Now this is another day, previous day high. So what happened? That's another key level too. What do we want to see? Price action on that key level. So if you go to higher time in like 1 hour, it will be clean. Let's go to one. Let's stay on 1 hour, so you guys can really see. So you see, there was this move that happened here. So when I saw this, I rushed to a smaller time frame. I rushed to a more smaller time frame. I said, okay, I'm seeing that rejection on that level. So this was now a high that was formed. So immediately I saw this, I understood that there have been a raid on a particular time again too. That's London session for me. There's been a raid, and this guy is pushing right down to the downside. So I saw that rate and I saw this huge displacement candle coming down here. Immediately, I just took the trade because this guy induced traders into buying and it's coming down. So I entered around this level. After I saw this candle close below here with the body, I immediately entered here. You can check my Instagram, my WhatsApp status, even on TikTok, you'll see the video, the screenshot I sent inside. And one thing about me, I have a capital preservation principle that I follow. I always go for what? 1:3. So by the time this guy was already here, I'm already out. Now you don't need to be greedy as a forex trader to be like, oh, why are you closing? Just wait for it. No. There's this saying that goes, a good dancer knows when to leave the stage. Right? So in and out. That's just it. So don't be like I'm holding T4 TP. No. Have a target. Have a limit. Right? Have a limit and then you bounce off from that. So this is where the setup came in. Now, again, I'm going back to the higher time frame. Remember, I was going against the trend. because I understood that what this guy was coming from this area here, it has collected liquidity and it closed again with the body. So external range liquidity has been collected. So therefore, it's coming from internal range liquidity. And now again, whenever, please note this one it's very important. Whenever you are going against the trend, whenever you are going against the trend, always target 50% of that range for your TP. Is that understood?
Yeah.
You know about that, right?
No, I'm just hearing it now.
Okay. Whenever you are going against the trend, target 50%. Look at what price did when it got to 50%.
The rejection.
Serious rejection. So to an extent, 50% of a range can be considered a key level.
Children.
Something. So that is why you see me now, I made something like this and I shared on TikTok that there are high chances of a BTC doing this. So any trade you are taking, there should be a reason. Like, can you re-explain? Remember, I already analyzed this stuff. So I have taken down everything and I have reanalyzed and I'm coming back again with the same result. You should know how to interpret your chart, your trades. Yes, I can hear you say you're buying. I can hear you say you were selling. But is there a reason for you taking that buy? Is there a reason for you taking that sell? You should have a reason. You should be able to back up your reason why you are entering a particular setup at a particular time or why you are having a particular decision based on whatsoever you're doing. And it does not mean that everything you say should work the way you want. As of now, this is 50% of this range. Others might call it breaker block, others might call it whatever they want to call it. Yes, Clinton, the book is still available.
How can I get the book?
That's on WhatsApp after the class.
Okay, sir.
So, it does not mean that when you mark your key levels, they must respect. Two things are involved. There are signs that you will know that it has been respected. There are signs that you know that it has been violated. Look at the candlestick formation on this particular key level. So on this level now, you can say for sure now, okay, yeah, this is now a breaker block. You see the first tap rejected. It formed a high here now. That is another key level too. Two things are involved. You could still come collect this one, or you can still navigate down and collect this one to induce more traders before actually going to the upside. But what we don't want to see is a thick body candle close below this zone. Anything we want to see around this level should be strong rejections. Anything we want to see with BTC around this level should be strong rejection. Right. Mr. Clinton, my WhatsApp number is on my bio. If you want to get to me, write me on WhatsApp. So, looking at the next nearest drawn liquidity, this right here is the next drawn liquidity. But now you need to discipline yourself because you've seen that, oh no, this is where this guy is coming. Let me just buy here. No, you don't do that. Let's say this is a trade that you are planning to trade. What you need to do is wait to see what the candles will do when they get to this level. And that's why you need a journal. You can even create a separate WhatsApp group or a Telegram group or a channel, or just create a Telegram channel, copy this and go and paste. Always try as much as possible to have befores and after. So you can come on, sit on your own, and then you review. Okay, let me see how this trade played out. I was actually marking this level. I was actually doing this level. Just do the whatsoever stuff that you need to do on that chart. Write something down. Say how you were feeling. Your plans, what were you looking out for on that particular key level? That's how you should. So now let's say you are preparing for London session tomorrow. This is what you have now. These are your key levels. You then want to wait to see what this guy will do when he gets to this key level. And that's just it. So when I'm just sitting and chilling, I can just go to my MT4 or my trading view and like, oh, let me see that BTC. Oh, it's still ranging. Okay. When I wake up tomorrow morning, I go over my watch list and I check to see what's happening there or what happened. And that's just all. I move to my next currency and do the same thing. So anything you've gotten today that you're just hearing for your first time from my explanations, anybody, just let me know what you've learned today. You have two devices on, you better off one.
Off one.
So, Mr. Alvin, what about you?
Well, on this, I've understood that whenever you mark out your key levels, you have to wait to see your confirmation, whether the candle will close above it or reject, so that you know the next ground liquidity.
And don't always forget the higher time frame profile, like where the market is going to on the higher time frame. Because there are times as a trader when you navigate from that higher time frame, by the time you're coming down, you are forgetting what you were actually like. They're just confused. Yeah. So you had a question.
Yeah. Two things I want to ask is this.
Yeah.
Among the higher time frame that we are talking about, can we regard 15 minutes as higher time frame too?
15 minutes will be regarded as higher time frame if you are taking your entry based on 1 minute. Okay. According to 1 minute, 15 minutes is higher time frame. According to 15 minutes, 4 hours is higher time frame.
Okay, whatever setup you have on 4 hours, your entry should be on 15 minutes.
Not like your entry should be on 15 minutes. If your key level is on the 4 hours, right?
Yeah.
Your confirmation should be on the 15 minutes. So it goes like this. It goes like this. If your key level, let's say this is your key level, this one right here. If this is on the 1 week, if price just tap on this level on the 1 week, to get entry confirmation, which maybe you're looking for change in character or change in state of delivery or market structure shift or displacement with the fair value gap and all that stuff, you are scaling down from a 1 week to a 4 hours. That is somehow like for day traders and swing traders, because you cannot go trades. You cannot be taking trades for 4 hours, right? Now, if your key level is on the 1 day, when price tap on your key level on the 1 day, you are scaling down on the 1 hour to align. That's why you always hear the word time frame alignment. If price tap your key level on the 4 hours, Your confirmation should be coming on the 15 minute. If that's on the 1 hour, it should be 5 minutes and 1 minute. I'm always saying this stuff. So me now, I'm always bouncing from 1 hour, 1 hour, 4 hours. And now I am applying what the concept of time and price. On a particular time, we will have big moves in the market. And those particular times are London and New York. So you should know when London session um, London session is opening on your own local time. Like you should know the time because at that particular time you will have some moves like AM accumulation man. You have Total Soup, you have price. We do some fast funny moves on that particular time, and that's why you always see me. I trade GU during London session because I just need to wait for a particular thing to happen, like that manipulation to happen, and then I jump in on the trade. Like you always see me, uh, I'll wait for price to rate an area, like something like this. This is a key level, and by the time London session is opening, you have something like this. You just see this huge move to the downside, and a lot of traders will fall victim like, oh, that thing is already selling. That thing is already selling. The moment they come and start entering for that selling position, it push back, it displays back to the upside, leaving behind a fair value gap. That is where I need to enter. So you will never see me enter a trade without being without spotting the manipulation phase first. Like in this case, this was the entry opportunity. See how price manipulated these lows, and then this was supposed to be an order block. So it displays and push to the upside, right? Giving you now an opportunity. So this is where you now enter after waiting for liquidity to be collected. Because after price have collected liquidity, it's always aggressive. That's why you start seeing traders that are forcing and increasing their stop loss. Look at the momentum that this guy gave here after collecting everybody, after hitting all the stop loss, after collecting all the liquidity. Look at the momentum, look at the speed, look at the speed, look at the speed. After collecting all the stop loss that was sleeping here, look at the speed that it came down with. So with time, I know it will be difficult for you to identify these key levels and actually know all of them, but you need to keep practicing. The more you expose yourself to the chart, the more you come to the chart every day and try to understand, like, okay, this was actually my forex pair I was actually looking at. Let me see what price did the moment it tapped on the key level. Like, let me wait, let me give. So you come now with a conclusion. You are giving now a conclusion based on what you have seen, and then you interpret by making now your decisions. Either you are going long or short. And after making your decision, you are now giving room for errors. That room for errors will corner your stop loss. In case this thing go against my level, this is where I want to come out. That's your risk management. This is at this point I want to step out in case it fails. This is what I'm willing to let go. And that's how you trade.
I have a worry.
Yeah.
Okay, yesterday was not to buy this day, but was actually trade. Now, the trade was because this was sitting on a level, which is on a fair value that I was looking out for. Looked at the 4 hours and it was price was at the key level. Now, we saw a liquidity, a change of character at fair value gap. I entered the trade, fortunately, it took went straight to now it's a trade, but I don't see let me not interrupt you, don't see reasons why it bought way three. Maybe there was a news at no.
You're talking about this BTC here?
Yeah. The market has happened today around the New York time.
This whole move. Yeah, you're talking about this whole move, right? So
Yeah.
this whole move, you can just conclude and say the reason for this swift move was due to collecting liquidity. Like you're just giving the technical backing of what you see here. This is like a technical backing, like it has collected liquidity before you can be um, judging to say you don't understand what happened. But knowing fully well that technically this is what happened and that's what's going. Sometimes these things will move and you feel like there was a news or there's some fundamental, but you know those stuff don't really affect BTC that much. So
Okay.
so it's just it just make us come back to the same conclusion. Like that's the simplest secret how you can trade. That's the simplest way of how you can trade by just understanding how to mark your key levels and just wait for price on them on a particular time because this is where the market opened when it was New York approaching, which is actually the 1 a.m. CRT. You hear about 159, so 1 a.m. just immediately 1 a.m. something happened. Look at this momentum. So before it was getting to 1 a.m., we are seeing the speed that was coming down. So why should I see a reversal on this particular time? There should be a reason. And then look at this guy up here too. This is 4:30 and then 5 a.m. So 5 a.m. something else happened again. So this was the 1 a.m. move and then the 5 a.m. So 159. So look at those particular times and see how these guys uh, behave on that particular time. So this will now make you to understand. That's why we, as a trader, need to have alerts. When it's 1 a.m. New York time, I have an alarm. When it's 5 a.m. New York time, I have an alarm. I have London open. So, and that's just it.
How do you set this alert, please?
How do you set an alarm in your phone? It's just to look at the time in New York. What's the time in New York now? It's 3 p.m. So if the time in New York is 3 p.m. now, what is the time in your country now? You understand? You go to your phone and you set an alarm. For me, when it's 1 p.m. Cameroon time, I get an alarm. You understand? Because that 1 p.m. for me now should be 8 a.m. in New York. So the title of my alarm is New York Open. So I know New York is on. So I now take decision based on that. So I like us to conclude. So I stop the YouTube video. So guys, if you're watching this video after the recording, make sure you like and subscribe to this channel because I will be dropping more YouTube stuff back to back. And if you have any question, make sure you drop in the comment section. If you want to join my community or get one-on-one classes with me, like I'm doing with my students right now, just write down the WhatsApp number. In fact, everything you need to get to me is on the link below the description of this video. So yeah, see you guys in the next video. Like, subscribe, and share.